This is from ChatBTC. I like that, like ChatGPT. With Meta trading well below the 200-day moving average, I was wondering at what level the hyperscalers would be in your kill zone. Well, one of them is in the I-13. That is Google, because Google is a very interesting play. They have a lot of the things that hit the tick boxes. Meta has been a challenge now. I did buy Meta a while back, I think 3 years ago, down the kill zone. That was $90. That was the good old days. But I never used to talk about rotation. Wonderful. Hey, Buckhorn. At what is your kill zone for Meta? Well, let's look at a couple of things and why it's under the 200-day moving average right now. This is Meta on the chart. And it's not physics. You can see here the red line is the 200-day moving average. And we have this weird little chopping area right now, like around this level 4 zone. It falls down, it rises up, falls down, rises up. And it's getting more and more compressed. But there is definitely a kill zone. We'll get to that in a minute. But the first question is, Meta. Why are they weak? And a lot of people are very excited by Meta. But after following Meta for literally close to 15 years or more, or whenever, maybe 20 years now at this stage, they are very good at the social stuff. And I don't use Meta. I'm not on Facebook or anything like that, or Instagram. There's probably hundreds of fake ones of me out there, but I don't do that stuff. However, they have been lagging behind in the AI world, but now apparently they're catching up with open source models. But let's look at a couple of things that does scare the market. First of all, earnings growth and revenue growth are slowing. The blue bars are the revenue. You can see it's been flat to down depending on the quarter you look at. Also, the net margin percentage is down hard in Q2 2026, and so are the actual earnings. That is spooking the market. You can nearly sometimes look at the earnings chart like this, and it maps directly to the stock chart like that. So with very extreme volatility in between. Also, there's a lot of fear about Capex. Capex fears is one of the reasons why Tesla's weak right now. One of the reasons why Google is a little bit weak right now. And one of the reasons why Meta is a little bit weak right now. And again, if you look here, this is the amount that they expect to spend over the next 3 or 4 years. And it's a lot. But Meta is not spending as much as some of the others. Red is Google, $341 billion by 2028, $302 billion 2027. The question is, when Google spends this much money, can they generate return on it? The answer is, I think so, yes. Because in the age of AGI, you need to pay it forward. Meta is blue, 217 in 2028, 196, 2027, 139 this year. So again, ramping very fast too. Somebody has to win. And this is the crazy thing about Apple right now. They're not playing the Capex game. Where will they be? Where will they be in 3 or 4 years? Because you don't build now, you're cooked. And we'll get to building, and we'll get to the shelling point in a few slides as well. Important to look at. Also, Meta target, 27% upside. If you look at the Wall Street analysts, 12 months out. Target 753 from the price it is right now. It's about 27, 28% upside. Not bad. There is a high target on the street of $1,000 and a low 580, pretty much where we are right now. So from that perspective, it's exciting, but is it as exciting as other names? I don't think so. Now, back to your question. Simple, straightforward line. I draw my little line, my little yellow line here. It's around 520, 530-ish. That would be my kill zone. But you have to look very, very carefully at earnings growth. And are they able to generate a return on their Capex? Remember, this is a company that totally screwed the pooch with their so-called metaverse. I can't remember, they put $100 billion into it and generated nothing. So they have a track record of flushing cash down the toilet. I don't like that. I like a track record of winning, building stuff with incredible moats that's unique. Now they're trying it again with AI. Will they win? We shall see. In fact, they built out a lot of scale for their AI, but it wasn't used. So now they're following the kind of Elon Web Services model, and they're renting it out too. But we'll see. We'll see where they go. I don't think they'll be a winning frontier model. We just saw Google actually give up the ghost on theirs as well last week. And the competition is violent. and it will be a race to the bottom unless, of course, you own the compute as well. So super interesting space, super interesting time. If I had to, somebody held a gun to my head and said, you had to buy Meta, I could say, okay, I'll buy it at 520, 530. And that would be at least fit into the range rider. And of course, Meta does well into the end of the year. So it could very easily rebound back up to that 660, 680 mark. So you could buy at 520, sell at 680, rotate it around in your tax-free account or whatever you like to do, or sell puts at the bottom, sell calls at the top. Super simple. Dunsies.